Congratulations, you got a raise. Oh, it moves you to the next tax bracket. Are you going to pay more in taxes now? Let's talk about that commonly misunderstood notion next. Hey there, I am Alison Eddings. I'm a CPA in private tax practice with Top Dog Tax and Accounting. Welcome to my channel and my office. If this content is useful, helpful, encouraging, anything, if this is stuff that more people should see, please subscribe. You can do your part by just hitting subscribe. You don't even have to go watch the videos later, but if you just would hit subscribe or share, it pushes this content out to more people like you who might have gotten a raise and be confused about whether or not they owe more taxes now. What? So, our federal tax system, I explain it like a trifle, but that was before like Friends was popular and they had that really weird, what is that, Thanksgiving trifle, Christmas trifle? I think it was Thanksgiving, where you have the different layers, right? Now it makes me want to have that for dessert. You have the different layers, and the fanciest layers are on the top and the cheap layers are on the bottom usually, right? So our tax code is like that. That currently the first, let's just make it round numbers, $20,000 of taxable income. That's not your total income, that's taxable income. That's after you take out your exemptions. Oh, we got rid of exemptions, deductions, standard deductions, and things like that. Exemptions will probably come back. Maybe if you're watching this, the tax code's been updated again to bring those back. But the first $20,000 in taxable income for a joint filer after standard deductions, itemized deductions, that's taxed at roughly 10%. Then the next chunk, not that first dollar, so not the next chunk is taxed at 12%. So you have your standard deduction for a married couple, let's say 12,000, plus another, for me, I said 12, 24,000, say 24,000 plus another 20 at 10%. So let's say that's 24,000. I am really bad at saying words today. That would be 44,000 because 20,000 plus 24,000 is 44,000, Alison. So the first 44,000 taxed at 10%. Plus that next chunk, the chunk over that is taxed at 12%. So when you exceed the threshold of that 12%, it's only that next dollar that's taxed more. It's not all those dollars that came before that. So if you get a raise, yes, those next dollars are going to be taxed more, but you're going to end up bringing home more money. I don't understand why people, when they get raises, they say their check went down. That may be a lot of things. Maybe have somebody look at it with you, but it shouldn't happen that if you get a raise, your total check goes down, unless for some reason maybe you have, I mean, that wouldn't even be I was thinking maybe if you had a percentage of your 401k being taken out, because that percentage would also go up, but the whole number should go up. Maybe if you had some kind of catch up or something, they prorated it and said you got this raise 30 days ago, but it didn't get implemented, so they have to, annualize something maybe, and maybe you have that bump up, in which case watch the video on bonuses. But for the most part, if you get a raise, yay, take it, be glad, maybe pay off some extra debt if you still have that, and just know that it might bump you into the next bracket, but that doesn't mean that your overall tax bill is that all of your dollars are going to be taxed at that number. No, just that incremental portion, that next layer on the trifle is going to be taxed at that. So I hope that was helpful and informative. If so, do subscribe and share, and have a great day. Take care.